Hey there, we're live March 28th, the last broadcast for March, and I think we're kind of going out in a little bit of a bang here in terms of the market. So we're going to get into that in a minute. Nothing relevant I can think about March 28th for trivia, so too bad. Let's see, we got more people rolling in. Thank you. If everyone can hear me, just let me know if you can't hear me. That'd be great. Thank you so much. And I'm looking forward to today's episode because we've got some new stuff going on, some exciting stuff I'm kind of excited to talk about. It's some new ground we're going to break today, and I think it's going to be a lot of fun. Not serious, but a little bit of fun. And we're gonna check out the account metrics, and we're gonna talk about that in a second. So wait for a few more people to roll in, and we'll get started. Okay, Constantine, good. Yep. Great. We got lots of people rolling in. All right, so I'm gonna get started here pretty quick because I have a feeling we're gonna run a little tight on time for our 30 minutes. So without further ado, let's check out the agenda. So we're going to take a look at the current market, what's going on, what has been going on since we chatted last week. We're going to do a little bit of live trading. We're going to be looking at the synthetic miner account, and I'll give you the stats on that in just a second. It's kicking ass, so that's great. And the topic is, want to bet on altcoins? Do this instead. And of course, we're talking about trading options. Why put your money on something that could go to zero tomorrow? Because a lot of people don't understand, and me included. I am no cryptocurrency expert. I trade options. I don't care what the option is. I don't care what it could be options on Chinaware. I don't care. If it's got a liquid market, I'll trade it, right? But I'm not a crypto expert, not by any means. So I know what MATIC is. I know what XRP is. Sure. The major altcoins, I know what they are, but I don't really follow them every day. So we're going to talk about those and maybe making some money off some of these altcoins without plunking down loads of cash to do it. And we don't have the new, sorry, this should have been taken out, this new order face functionality. That slide should have been removed, or that thing should have been removed, because we did end up covering that last week. And of course, that was the futures order functionality feature, which I've already been using and I like. That's good stuff. And then we'll get into a Q&A. So let's just quickly take a look at the synthetic miner results we've had. Results to date, it's been exactly 4 weeks to the date. If you remember, 4 weeks ago, we opened this account. We took the USDC, we transferred it to Bitcoin. It was about $5,200 worth. And the entire point of this account is to generate more Bitcoin because we have a long-term bullish bias on Bitcoin. Expect pullbacks, but that's what we want to do. So we started off with 0.0825. We're currently at 0.0874. So we've mined, you could say we've mined 0.0049, which is a 5.89% increase. And you know what? I'm saying cost of mining is 0.5 man hours per week. I'm going to get some more data on this because I want to find out what the average miner pays. How much does the average miner pay to mine 0.0049 of Bitcoin? I have no idea. Ours is just sort of a one-time investment, right? We put $5,200 in there, and that's going to be it forever. Whether we do this for 5 years or whatever, and that's it. And really, the only input we have in is a bit of time, and I think half an hour a week is probably about right. We go days without looking at this. Now, if the market takes a huge plunge down, we'll have to look at it. We'll have to make some adjustments because we're mostly selling put spreads. But we're not really doing much with it. It's like the easiest account to manage ever. So, in fact, the danger of this account is wanting to jump in and make more trades, right? But we restrain ourselves, we hold ourselves back a little bit. And of course, our USD annualized return as of today is about 802% annualized return, which of course is off the charts, ridiculous high. But hey, why not? Let's see. So Richard and I are both very, very happy if Bitcoin goes up, especially if it grinds up slowly. It'll be brilliant for us. If it goes sideways, it's fine. Even if it goes down, as long as it's a grind down, fine. Who cares? The only thing that's going to really bother this account is if we get one of those 15% move down, over a day or two, and then another one. That's really going to hurt. But of course, that's going to hurt anyone, whether you're hodling or anything, because the value of your Bitcoin is going to go down. So we're pretty stoked and pretty happy about that. Richard, you're sharing this slide. Can you turn that off, and then I'll just share my screen? Would you mind? I don't want to do them both at the same time because sometimes Webinar Jam gets cranky with me. So you can just click on the top there, stop share. Thanks. All right, so let me just jump over and I'm going to share my chart. We're just going to look at Bitcoin today because I want to get straight into the synth mining account and then the altcoin trading. We're going to be opening some trades on this, and you'll be discovering a few things along with us. If you have not yet traded in these altcoins, I think you'll find this quite handy and quite useful. And I would like to point out, hey, if you want to follow us day to day and see how we're doing, how we're generating that 800% annualized return, you can join us on Patreon, of course, on the live stream anytime you want. Patreon.com, Rogue Trader Academy. All right, let me take a look at my charts here. There we go. I assume you can see that. Yep. Okay. Interesting. So I'm going to zoom in a little bit here and forget all these EMAs and all this nonsense, right? It's like someone threw some spaghetti at my screen. We had this massive candle yesterday up to 72 and then massive move down to about 68.5. And, hey, we've been doing this a long time. We got other stuff to do too, So Richard and I kind of forgot about the Easter holiday. And we didn't bother, taking a look. And it turns out today and tomorrow is a CME holiday. So this was right at expiry yesterday. It was boom, boom. There's a bunch of rehedging going on, big moves. We were like, what the hell's going on? And that's what it was all about. But since then, since this morning and last night, oh my gosh, look, it's just steady grind up. I mean, this is pretty spectacular. We're certainly at the top of the current little range. The all-time high isn't too far away. It's only a couple $1,000 away, right? So now I don't expect personally, I do not expect Bitcoin to make a big move before the halving. I could be wrong. Who knows? I got a feeling we're going to monkey around. Now, I saw a lot of people out there, not a lot. I saw a few people post some things saying, oh, technically, this is going to be our new support level. Maybe, I don't know. And other people are saying, technically, this is going to be resistance. Well, I don't know. Could be. I'm kind of 50-50. I'm kind of 50-50 up into the halving, maybe even into later in April. I think that we're not going to see a lot of action until the halving is finished, and then we're going to resume the uptrend. That's my personal thoughts, but of course, I will adapt to whatever the market decides to throw at us. So what have I been doing? Well, on discretionary accounts, I've been throwing out iron condors. If I don't think the market's going to move out of a range, why not, right? So I got my strikes up here, some low 70s, some at 69. I adjusted. Everything else in the high 50s and low 60s. It's just churning away and making money. And I'm putting these on short term because long term, I have no idea. So I'm not looking into May, things like that. But they've been printing money for us quite well. So I'm quite pleased with that. You can see over here, I've got Solana, and I've been looking at MATIC, and I've been looking at XRP, the three altcoins that Deribit now is listing. And you can see down here, as this is a tool I brought up on TradingView for Richard and I to look at because we wanted to see what the historic implied I think this must be implied volatility here, what it's been, what its range is. But we want to see the historic price range and the historic implied volatility range in order for us to get a handle on making some trades. So, Richard, if you want to share your screen and maybe we can take a look at the synth mining account, we'll quickly review what's going on there. Then let's jump in and do some trading in the altcoins.
Yep, sure. 1 moment. Do you want to turn your screen share off?
Indeed.
And I think actually the volatility you're looking at was actually historical vol.
Could have been. I'll confirm that in a moment here.
Because there was no option market all year to make an implied vol. But okay.
Actually,
shall I make that a bit bigger for people? There we go. So the synth mining account currently net value is 0.0877. We started with 0.0825, so that's 0.0052 up in terms of its equity, and then in terms of the cash on account is 0.0916. So that's we've got a little bit of value to come out of here. And the reason for that is the positions we had to roll down to 5th of April, no, not 5th of April, the 12th of April, Actually, earlier in the week, we had actually rolled some positions out to 26th of April, and we took a view that as markets moved up, we could probably just squeeze some of those 26th of April puts into 12th of April to bring them 2 weeks closer to expiry, which we did as a premium neutral trade. And so we just traded some strikes for time, moved those spreads up a little bit to 63k, which I think we're kind of okay with for now, right? It's on the edge of the 1 standard deviation range, and that's pulling in 110 basis points over 14 days. It's not quite the rate that we want, but we shouldn't have to have these positions anyway. We've already overtraded, even though we're only using 18% margin.
Yeah, and just a reminder for everyone, our goal here is to make a minimum of 10 basis points a day. And if we make a bit more, sometimes we'll use that extra value to buy some long-dated calls. So we're just selling put spreads for the most part.
Yeah.
I don't think there's really much to do here. I guess we didn't do any trading on this account today, and we decided because we really don't want to go over 25% margin use. So I think we're just we brought those stuff forward from the end of April. We've got excellent decay going on. This really, like, we literally, I had a hard time even justifying saying we spend half an hour a week on this.
Yeah.
It's 5 minutes a day max. We don't even look at it for some days. So,
and just to be clear, the trading strategy right now is to let these 5th of Aprils expire, hopefully in a week's time. So as long as the market doesn't get down below 65k, that will all expire nicely. And this is, as you can see, 70 basis points of net value in there, and 7 days to run, so that's 10 basis points a day. And then when that expires, the 12th of April becomes our current month. And as we have some spare margin, we might write something in the 19th of April, because that'll be the new 2 weeks.
Yeah.
Just to start feeding in. But we could otherwise legitimately just leave this alone and do nothing until the 12th of April, and we'd still be ahead of schedule. Just to recap on that, 10 basis points a day is compounded up is 50% per year. So if you're increasing your bitcoins by 50% per year, it doesn't take many years before you've got a chunk of Bitcoin.
And the degen in us knows that we won't wait until the 12th. We will put more things on. Sometimes I have to smack my own hands on the keyboard. Don't trade it anymore. Okay. So a question I had for Richard this morning is we kind of have an idea what we're going to do here. And if Richard, if you want to jump over to the Sol linear options shit. Now, these are linear options, right? They're just like linear just means normal, really. People, what's linear? Well, it's just like normal options. They pay off in USDC versus the underlying.
So actually, can I just cut in? So just to be clear, Deribit's Bitcoin and Ethereum options are often wrongly called inverse options. They're not inverse anything. They are cash settled options. It's just that the payoff is converted to Bitcoin before it's paid. That's all, or into underlying before it's paid. The so-called linear options are standard European options that are cash settled, just as you'd trade on a index option on an exchange. So the USDC is the quote currency, isn't it? And the collateral.
Yeah, and the question I had to Richard this morning when we were discussing this, I thought, well, hang on. In this account, it's our synthetic miner account, and we're trading Bitcoin. We're getting paid off in Bitcoin. We keep our margin under 25%. But if we're trading these altcoins, which the underlying is USDC, how's that going to affect our margin? So we don't know exactly. So we're just going to put it on trades, and we're going to see. So I think
that's what this segregated is all about. The options are segregated according to what the underlying quote currency is, so the only money we'll be using for margin for these options is USDC, and it won't affect our other currency.
I guess what I was trying to say was I don't know how that's going to be displayed.
Right. Yeah.
Like I just don't know how. Like, are they going to show up too? I don't know. So we're going to see.
Yep.
So I think what we're going to do here is look. Richard and I don't know a damn thing about the trading patterns of MATIC, XRP, or Sol. So we're not just going to jump gung-ho. I don't have a directional bias in this. I suppose if Bitcoin explodes and goes to the moon, well, I suppose these things are going to get dragged up with it. It's reasonable to think. But if we look at the options expiries on these altcoins, nothing goes out further than the month. And in fact, when I looked at this yesterday, April 12th wasn't there. It was just the 5th and the 26th. We're going to do the 5th, but I think today we might look at the 12th on some of these trades. Because if we get into trouble, we need someone to roll the damn thing to. If we put on April right now and the market makes a 10% move and we get pressured on one of our short positions, we're going to move it. We got to sit there and suffer and suck it, right? So I don't want to do that.
It's also worth saying that so one strategy we could employ is hedging with the perpetual. But the trouble of doing that is that we had a look at that, and the Sol perpetual, for example, was USDC.
It didn't seem like a reasonable thing.
The issue is that the there it is. The funding rate is 10 basis points every 8 hours. And here's the funding history. So we're talking about historically between 5 and 10 basis points per 8 hours. So that's between 50 and 100% a year interest rate. And we just don't want to be going long. In fact, I'm kind of almost happier to sell puts on this stuff and then hedge it on the downside with perpetuals.
Yeah. and make that money. Yeah.
Just make the carry, right?
So, long story short, we're running out of time. What we're going to do here is we decided we're going to start gently. We're not going to jump in. We don't have a directional bias. We want to be opportunistic with these altcoins. So if it takes a big dump one day, well, maybe we'll jump on it and look for a reversion. Fine. But right now, we're just going to throw out some iron condors. We're going to do short iron condors, probably roughly a 20 delta short strike, and see if we can make some money. We're going to look at the 5th and the 12th. We're just going to put them on. We're going to cross the spreads. Yep, there's low liquidity. They're brand new. It's a new tool from Deribit, so you're going to need some time to get in there. But we're happy to go in there and make a bit of a market and just put these trades on and see if how much money we can earn in a week or two on these things and get a feel for the market. We don't want to go in heavy. We're not going to be going close to the money. I think 18, 20 delta is fine for the shorts, maybe a 10 delta on the upside, and that's what we're going to do. So when I was looking at my notes for Sol, we're going to start with Sol. We're looking at maybe a 140, 160 on the puts and a 220, 240, and I got that from the delta and also looking at the prior range. So we're going outside the prior range. We're betting that, hey, by the 5th or by the 12th, we're not going to bust out of recent ranges. So I'm happy to do that if you are.
Yeah, I mean, it's entirely unknown. What week were you thinking? Friday or the 12th?
Well, originally, yesterday, the trade would have been a good one on the 5th, but I don't know. I was looking at the 140, 160. Let's start with the puts. The 140, 160 on the puts. This morning I looked and there was no market for the 140.
Yeah, there is a market. It's $1.29.
Okay,
mid.
What do you think?
The spread is $1.10, $1.50. It makes me sad. Yeah, we're going to struggle to get value out of that, out of a spread.
Yeah. Well, there's not a lot there, and the multiplier is 10 for Sol. So let's just see if we get.
Look at the 12th then. So
let's
basis it'll decay fast. Yeah.
Like I said, on Sol, I felt 12th was probably our better bet.
So 20 delta on the downside is 160, 155 strike.
Okay. Well,
terrifying. Where do you want to go?
Let's do 155.
All right.
Sell that, and then we'll buy like
what size? One.
Well, that's a good question because we don't know how they're going to affect things.
The sols there's 10 sols per contract, isn't it? So we're selling 10 sols if we. Yep. It's $2,000. That's a fair chunk of our collateral, actually.
Well, let's see what happens.
Let's price one contract then. Let's put a sell order in here.
Now, I'm assuming we're not going to get hit on anything in the middle because there's not a lot of people trading yet. So we might have to cross some spreads.
Should we walk this down and let's walk it down in chunks of 10 cents?
And we only got 10 minutes, so we're going to have to kind of go quick here. But the basic strategy we're doing is we're just trying to get used to this. We're just saying, okay, let's give some of these a week or two, see if we can pull in some premium, make some money, Are we going to get challenged? Are we going to get threatened? Is more liquidity going to come in over the next 2 weeks? I don't know. We're just going to trade this basically in a chart bias and a delta bias. We've got a pretty strict set of rules.
So
the one thing I will say is, as Richard's putting this trade on, if we've got these trades on, hey, we've all been trading Bitcoin or Ethereum options, and Bitcoin Ethereum moves. Oh my God, the market disappears, right? For a few minutes or something while this craziness is happening. We're going to expect that 100x on these things. If the market makes a move, you know what I'm going to do? Not a damn thing. Not a damn thing, because there won't be a market. I'm going to get hosed. I'll wait till the market settles down. Even if I'm out of the money, I'll wait for the market to settle down, and I'll adjust then. And I think that's very, very important.
Yeah, I've had to cross the spread here.
Yeah, we're basically making the markets, yeah, and that's okay. So
well, not even that. We're taking.
We're taking, yeah. The market makers are going to love us.
And then on the puts, on the cover, we're about 120ish. 5 delta, 10 delta. Oh, I've lost your sound, dude.
Sorry, I didn't want to make those spreads too wide, like the wings too wide. I kind of wanted to keep them a little tight because we've never traded this before. I'd rather make less money, get a feel for it than,
Oh, do you want 140 or 135?
Yeah, 35, 40. I think I'd be happy with that. Let's do the 35. It's a 10 delta. We'll keep things nice and tidy.
Yeah, okay. Okay. So look, these spreads are.
I think you're just going to have to jump in the middle. Maybe there'll be a hidden order. Otherwise, we're just going to eat it on each side just for demo purposes because we don't have time.
Okay. So we're okay. We'll just demo it today.
Market makers are going to love every Thursday. So this is phenomenal. Every Thursday we get these great fills on each side. What's happening?
There's no algo watching us yet.
It's Deribit live.
All right.
Excellent. Okay, so what's that done for our
margin use is 1.25%. So it's pretty good.
Yeah. So it's
because we're risking what $20 times 10. So we're risking $200.
Yeah. Okay. So let's go up to on the calls. I was thinking at 220, 240, something like that.
220s.
All-time high is 208. So 220.
All right.
Oh, we can. Well, you know what? That was on the 5th I looked. So this is the 12th. So it's going to be different. Those deltas. Do we want to go a bit lower in this case? Maybe 235 or something.
Let's try and get some premium in. Otherwise, it's not worth doing, right?
The DGen news coming out. Sure, fine. Let's do it.
Actually, this one's not looking too bad. So the mark is 599, and the actual offer is 610.
Bit better.
The 225. I could cross that in good conscience.
Okay, let's do it.
At 605 now. So
hang
on. The bid's 510. Hang on. I'm way out.
I'm not checking your work.
Yeah, I'm way out.
And while you're doing that, I'm going to look up MATIC just to double check our.
So nobody wants to buy it from us. So market makers are happy to sell it.
Okay.
Yeah.
Where are we here? You're on the 12th. I see you there we're just going to have to walk it down. There's just. There's a choice.
Trading penny stocks, isn't it?
It's a big spread we got to give up. We just got to choke on it. There's nothing we can do about
we're
it.
just going to sit at loss for 2 days.
But for you guys, if you're doing this, you can throw some orders out. Throw it in the middle. Be around the mark price. Give yourself some room, and it's a new product. So
I can't do anything. The dog Swiss walked past and put his foot in the lead of the mouse. Whipped the mouse off my desk. Thank you. Okay, 510. Bam. Oh, no, come on.
What? They saw you walking it down. That's the problem.
Yeah.
Just got to hit them next time.
Okay. I've learned my lesson. $5. All right.
Okay. And on the upside, I don't know. Let's see. We got maybe the 250. I don't know. What do you think?
going to have, so we'll take to pay $3 for the cover. So
we're going to have to pay $3. Just hit it. See, the thing is, hang on. If you cross $3, won't you get anybody who's hidden in between?
If they're hidden.
If they're hidden, yeah. So you may as well just cross $3 and not walk the order up. They're like, "Are you sure?
Yeah.
Are you crazy?" Yeah. Okay. Yeah. All right. Got our spread on there. Okay. 0.89% maintenance margin. It's nothing. Hang on. Are we sure we have to multiply this by 10 here, or is it already being multiplied?
Well, one contract represents 10 Solana.
Sorry. So what do we stand to make here? Like, we should be multiplying this by 10. We should be doing 10 contracts.
Well, the premium we've pulled in is this trade history. Here we are. The premium was trade log. Hang on.
Yeah.
Price, index price, smart price, cash flow. Hey, cash flow. Here we are. Oh, he's got a.
All right. Again, guys, first day trading this, so you got to bear with us a little bit.
Okay, so we pulled in $101 and we spent $59. So we pulled in $42.
Okay. So not much. So we should have been doing this in tens and not in ones.
Well, let's see how this goes over the week, and then we give us confidence for the next trade.
We could add 4 to it and make it 5 contracts, and at least give us something to play with. But let's quickly jump over to MATIC then, and then we'll do the same thing there.
Was it the 5th or the 12th?
Let's look at the 5th.
Yeah.
70, 80, and then 130, 150 is what I was thinking. Let's see if there's still a market there for it. 70, 80 on the puts. Yep.
There's no market.
Okay. And we can adjust those strikes.
We could take these 20 deltas here, the 90.92.
Yep. 18 delta. And then what on the downside? Maybe the 35s or something. Or no,
this one's
60s.
More. 60s. Well, there's this price is 0 here. There's no one quoting.
No. 80, 85. 80s. Maybe what I was thinking.
85. Okay. Buy.
Yeah. All right. Yeah, we're just gonna have to cross that up and just be done with it. So we don't want to do this in one because we'll be making some pennies. It's just not worth our time.
This is 1,000x, isn't it? It's 1,000 MATICs.
Yeah. So we should probably 100 at a time.
That's going to use a lot of margin.
I don't think so.
I think let's try 5 and see how much margin that uses.
Yeah, just hit the offer.
What's the offer?
On the bid, on the long, 60.
No, I'm on the short. 100.
Okay.
Okay.
4%.
Oh, that's only done 1. I thought I changed it to 5. Anyway, that's using 4% margin, so that's a chunk.
Well, until you put the long leg on.
Yeah, it's a lot less when it's covered.
All right, so let's add 4 to it and just do it and get this spread done.
Yeah, you want to 4.
Everybody's like, I always say that when people watch us on our live stream, I always comment to Richard, I think like it's probably like those people who like to watch people play video games. It's kind of weird, it's kind of weird to me, but there's people out there who like it.
I watch people play video games. It means I don't have to buy it.
Okay.
I've been watching people playing Helldivers 2 recently. It's quite funny.
All right. Well, normal people don't do that.
Okay. On the calls, what are we doing? The 112s?
I was thinking yesterday. I was thinking this is MATIC, right? 130, 150, but that's not going to work today.
No way. No.
So, yeah. Why don't we do the 112 and then 120s? What do you think? Yeah. Yeah.
Okay.
Great. And then we'll go to good old XRP.
And just to be clear, we're opening up with iron condors, and then we're going to start doing cleverer trades in the following weeks.
Yeah.
XRP.
Yep. So the XRP, the numbers I had were just kind of looking at 45.52 on the puts.
It's going to have to be the 12th then.
Yeah.
I think the vols have come in because of expiries and so on, like the holidays.
Yeah. So let's just do like 18-20 deltas then. So we can look at a 55 or a 54 short, and then we can pick up the 48 or something. So again, the idea here is we're going to open up with these short iron condors, get a feel for what's going on, maybe pull some premium in, maybe collect it all.
And 40, 44, 46?
Yeah, I think like the 8 delta, something like that.
Okay,
whatever you're comfortable with. And just get a feel for it. I didn't want to go in and do any directional trading. Right now, I don't have a directional bias even in Bitcoin except for long term. Of course, the only contracts that are available on these altcoins are short term. Nothing goes out further than a month anyways. So
and what about the calls?
We're keeping it tight. I had, this is XRP, right? 74.82.
So 20 delta-ish.
Yeah.
Okay, let's do 72 because I think vols are a bit low now.
Okay, 23 delta, 72. We're selling that, and then we can buy the like the 80 or something, a 9 delta.
Yeah. Okay.
All right. So that's all we're gonna do for now.
Yeah.
Set it up. We'll see what happens by next week. We'll be halfway in. Maybe we'll decide to. We don't know how these are going to decay. Are we going to see them hold value, then lose it all in the last few days? Would there be no market for some of these once you get close to expire? We have no idea. We didn't want to go in too heavy. We wanted to just take it easy, start off gentle, and then once we start to get some idea of how these things trade, then we can start to put on some more clever stuff or directional trades or butterflies. We discussed a lot of those ideas, but none of them seemed to make sense. None of them really made a lot of sense for us yesterday. So I think we're happy just to do this, start off, and let's see how we do. Of course, if you guys have any opinions or ideas for these coins, if you happen to follow them and you think, let me know. We can consider that. We can roll them into our possible strategy going forward.
Couple of questions there in the
okay. Dominic, extreme volatility, low liquidity. Yes, the volatility is taking some big swings on these altcoins. When I looked at the and just so you know, that study I was looking at in TradingView was the relative volatility index. It's the only thing I could find for it, but it gave me an idea of what was going on. Dominic also says, yep, those crazy times in the options market, I use perp futures to hedge against account drawdown. Yeah, it just makes sense, doesn't it? Q&A, another Dominic. Okay, so how do you set up your hedges on perp futures? Just a simple stop market orders. How do you handle a situation when the market bounces back fast? Great question, and it's a problem we all have to deal with, right?
So, yeah, I tend to prefer delta hedging on a periodic basis and not trying to catch the market. On the other hand, you can set up stop market orders to sort of catch the market as it starts breaking through. Of course, you're right. You very often get a wick and a reversal. And one thing we try and do is if we hedge aggressively on towards the upside, we'll try and buy some puts just in case it wicks back down again. But it's a tricky one. The answer is that if you are trading in sizes where the hedging matters, you're probably trading too big. In markets like these are 70, 80 vol markets. They're not to be trifled with. So if you keep position sizes small, where you can withstand holding a delta for a while, then maybe that's better than having to hedge aggressively.
The other thing I'll mention there is if you have a stop order because you want to hedge off the entire position if you're worried it's going against you, that's often a mistake, in my opinion. And the reason why is for the exact reason you stated, we get these wicks. So if I'm going to use stop orders, I'm using it just to take a little bit of the sting off. And I'll layer them through because I don't want to have one wick throw me one way, get thrown the other way, and get whipsawed, right? So I'd rather have them smaller and you can accumulate. So if it is a trend, hey, you got maybe a third of your delta hedged off that way, and you can come back and do it manually the rest. What benefit do you see in trading options on alts instead of Bitcoin? None yet.
Well, if you're prepared to sit there with the orders in the market, you get people like us come along and take your orders, $10 off a dollar off the price, so you win. So I think it's early days yet, but I think at the moment, to be honest, so we've done the wrong thing here. We've sold iron condors and we've paid the spread, and so we're affirming very strongly that the market's not going to move, which is probably an unwise thing to do with MATIC and Sol and so on. What we are going to be doing later on is trying to set up trades that are going to set us up for catching a lot of value out of big moves. So that's probably, if you've got a strong view that MATIC or Sol is at the wrong price or could move quickly, or then we heard a rumor the other day, didn't we, that people involved with MATIC had been served notice by somebody, SEC or someone, to give evidence or whatever, and that spooked a few people we know. And then I checked that with another guy, and he said they're all getting served with notices at the moment. The SEC are on the warpath for everyone, and it's no big deal. So. If you took a view that actually there's going to be a massive crash in MATIC, then there's a good opportunity to buy puts or buy put spread, or sell calls and buy puts, or something like that, to take advantage of that just in case that news develops. Don't take this as a stop press, right? This was about a month ago I had this conversation, and nothing's happened with the price since. So
it is important to note, we cross the spread, we put these trades on. This isn't something we would normally do. But we have a limited amount of time. We need to put the trade on, right? So, bam, there you go. It's not ideal. If we really wanted to get in on this, we would have just shaved off in front of the market makers and hoped to get hit. So, again, this is for demo, right?
Yeah, but Deribit have just recently launched these markets, so it's going to take some time for liquidity to build up. But at the moment, if you've got a strong view, I think you can get in there and put a position on and hopefully benefit from it.
Yeah. Last question here we got to run. What are your thoughts about transforming a short strangle into an iron condor over time to take advantage of price swings and potentially lower IV?
Yeah, it's called legging in, and it can go right or it can go wrong. So on average, we don't bother, because what we tend to do is actually run
the
orders for both legs, and as soon as one leg gets filled, we fill the other one. We cross the spread on the other one, because we don't like being exposed. Because if the market chose that moment to crash, then you're uncovered, and you end up spending more on your cover than you've got on your risk. So if you're going to do that, probably buying cover before you sell risk, probably, but then you run the risk that vol drops in the meantime. So really, I know that Deribit are actually going to improve the liquidity in the combo markets or the strategy markets pretty soon. I know it's on their plan. So the way to trade spreads or iron condors, for example, is really to use the combo markets. You benefit from lower fees. You get a better, theoretically, you get a better fill. The market makers certainly have no excuse not to give you a better fill, because the combo position is better for them as well.
The other thing I was just going to mention about that is oftentimes I'll do it the other way, because I always buy cover when it's dirt cheap, and 80% of the times it gets thrown out the window, but I don't care, it was dirt cheap. And then I build the spreads off that. So I start with a long strangle, oftentimes, not always, and then I build in. So for instance, we've been going up here, pushing up. Actually, I see we're at 71,300 right now. Interesting. So I buy puts when it's super cheap. But if tomorrow we're down at 68, well, I've got my cover already, and it's easy for me to sell puts against that. So that I typically build it the other way. But it depends on what's going on at the time. If you have to be in front of your computer when things happening.
It's it's interesting. I don't see this often. We've got market moving up while implied vol's not doing anything. Normally there's a correlation. So the indicators here seem. My feeling is that these spot moves we're seeing are more to do with expiry tomorrow than they are to do with any real market sentiment. line the market.
And I think you said that tomorrow is the biggest expiry that Deribit has ever had. So it could be some adjusting here. I don't expect the market to go a lot higher. Who knows? It could. But I think we're in for 3 or 4 days of quiet over the holidays. But
like you can imagine, if dealers are short gamma into this expiry, then they're going to be as the in the money short positions get bigger and bigger delta, they're being forced to buy more and more perps to hedge. And you can see the funding cost going up. The funding cost is now 5.8 bips per 8 hours, which means so come expiry they're going to be kind of 1 delta. And if they're hedging with perps, then come expiry they're going to have to unwind those perps, which would kind of imply a risk of a sell-off over expiry tomorrow morning at 8 a.m. We'll see, because they might be converting those perps to March futures. Although I think the funding cost for the dated futures is even more, isn't it? So look, you're paying 19% for tomorrow. It's not too bad.
Mm-hmm. Yeah. Well, we'll see what happens. Again, I think even if we have a sell-off, I kind of expect this current range to hold a little bit, or at least to stick over the next few days. And we can see that. The new expiry that came out this morning, it was cheap. There was cheap. The wing protection was cheap. We hadn't seen that cheap actually in a week or two.
You mean the 31st of March?
Yeah.
Bear in mind it's a holiday weekend though, right? So
that's what I mean. Yeah.
Because at the money 56 full, that's pretty low. But
that's why I'm thinking that the market's probably not going to move, but we'll see what happens. Okay, we're way over time as always, but we had a lot to cover. A little bit tedious as we went through, but hopefully that'll help you guys. If you want to jump in this market and trade, don't just cross the spreads like we did. Please, maybe fish for a good fill. Unless you're very aggressive and you think it's going to go, then fine. You don't want to miss the opportunity. But let's see what happens. We'll check back in on this next week. I think, Richard, are all our positions on the 12th? MATIC is the 5th. So by next week, we probably won't have that MATIC anymore. It'll either be bought back, closed out on both sides, or it'll be a horrible loss. I don't know. or it'll still be on, and there'll be no market to get out. We just have to wait for expiry. Who knows? Yeah. But we'll see. So it's a bit of a learning process. So hopefully it's going to help you guys trade a little bit better as well. Okay, everyone, we're going to wind down now. Thank you so much for joining us, and we're going to see you next week, the first week of April. Until then, happy trading.